Hi, this is James Shug with Westpac London's end of day report for Monday, November the 7th. Well, it's all about Europe again, with Italy very much in focus. We're also waiting to hear details of the new unity government that has been put in place in Greece today. It needs to be put in place by the end of today, actually, if Greece is to receive the next tranche of bailout funds. Of course, Prime Minister Papandreou is stepping aside as part of the deal, and there'll be elections held next year. The purpose of the unity government in Greece is to push through the austerity measures that are required, such that the bailout funds are sufficient for Greece to meet its budget obligations, budget deficit funding. So the focus on Greece is still very much there, but the real concern is about Italy. I mean, Italy has got 1.6 trillion euros worth of government debt outstanding. About well, certainly before the end of next year, about a third of a trillion euros need to be rolled over or repaid by the Italian government. Prime Minister Berlusconi may or may not have resigned today, or may be agreeing to step down, or won't step down because his immunity against prosecution for various private, problems he has in his private life related to court cases. He loses that immunity. There's all sorts of uncertainty about the Italian political situation at the moment, including the commitment of all Italian political parties to austerity. This has meant that the Italian 10-year bond yield rose to 6.68% today at its peak. That's the highest it's ever been since the euro started. Now remember, once yields sort of trade consistently around, or once yields traded at consistently around 7% at the 10-year part of the curve for Greece, for Portugal and Ireland, they basically had to throw in the towel and accept bailouts. And the concern is that Italy is getting very close to that sort of problem area. We had those concerns were compounded by weak news on the European economy today. European retail sales fell 0.7%, 0.7% in September. Annual sales growth is now minus 1.5%. That's the volume of sales down 1.5% on a year ago. It was running that pace of decline in the second half of 2008, and that's when, of course, Europe was already several quarters into recession. German industrial production fell almost 3% in September. It seems that the overhang of orders that were very strong in the first half of this year, that's now being worked through. Industrial production is heading the way of all the other European indicators, turning much weaker. A Centix survey of investor confidence in November fell for the 7th month in 8. The level of that index is, well, in fact, the whole shape of that index mirrors the fall it showed in 2008 when Europe was heading into recession. Every piece of data we're getting these days can sort of be looked at in terms of similarity to the 2008 story when Europe was either in or heading into recession. It's worth noting that the European Central Bank is now talking about a mild recession next year. The OECD is implying there'll be a recession in Europe next year. The Bank of Canada is forecasting a shallow recession in Europe. We think it's going to be a bit deeper than shallow, unfortunately. But certainly the consensus is that Europe's either in or just about to enter a recession. The question is really now, how deep is it going to be? So no US data to report today, so I'll move on to markets. The Dow at the moment is down 0.4% at 11,941. As I say, no major US events, just negative sentiment in the equities there, flowing on from the negative sentiment in European markets, where we've got the London market down 0.3%, the French are down 0.4%, and the German market's down 0.5%. Now, they're not particularly big losses. We're heading into the close in Europe, still quite a few hours to go in US trade. The losses earlier today were steeper than that, and of course anything can happen between now and then. We've still got ongoing concerns about the Greek unity government, which hasn't yet been pulled together, and as I say, Italy is very much in focus. On the commodity markets today, we've got gold prices up 1.6%, $1,784 an ounce. Oil up 0.2% at $94.88 a barrel, and copper prices are down 0.9% at 353 cents a pound, that is. Aussie dollar, not much changed, 1.033 against the US dollar. And on that, we've got our friends at NAB putting out their business survey, latest business survey later today in the Australian session, and we've got the trade figures, monthly trade figures for September. We're forecasting a 3.4 billion trade surplus, which would be an all-time record high for that. So one little bit of good news, I suppose, around the world there. All right, that's it for today. Back tomorrow.